Wachovia or you go to First Union Bank, wherever you go, you're not probably borrowing money from them. You're probably borrowing money from Fannie Mae. Fannie Mae gives them the money, and the bank takes a spread on it and continues to service the loan. Fannie Mae bundles those mortgages and sells them as something called mortgage-backed securities on the secondary market, and that's how Fannie Mae stays in business. Part of the problem that we ran into over the last few years is way back in 1992 to 1994, Congress decided that we weren't giving enough loans to low-income families. So they increased the requirement that Fannie Mae give at least 30% of their loans to low-income families. And in the old days, we used to have good credit, we used to have money down, which is collateral, and we used to have jobs. They found that too many low-income families didn't have enough money, so they reduced the requirements for down payments. And they found that too many low-income families had poorer credit, so they eased up on the restrictions on credit. And they found that too many low-income families only had a job for a year or 6 months instead of the 2 years that were required. So they eased up on that and allowed us to do something called stated income loans. What happened, unfortunately, since every lender follows Fannie Mae guidelines, or almost every lender follows Fannie Mae guidelines, is everyone eased up on the restrictions. And a lot of people made money with it. But the reality is a lot of loans were written to people who couldn't really afford it. At this point, Fannie Mae and Freddie Mac control about 58% of all home mortgages across the country, and a lot of them are bad loans.
You mentioned some lenders follow Fannie Mae and Freddie Mac guidelines. Why only most? Why not all? And is it they're not required to, evidently?
They're not required to. Most banks don't hold on to the mortgage money or don't hold on to the loans. They loan out money and then they sell them on the secondary market. They'd rather make a little money now than a lot of money over time. Some smaller banks will warehouse loans. New Tripoli Bank, there's one in Berks County called Mid-Atlantic Credit. There are a number of small banks that do allow you to borrow money directly from them.
Chatting with Loren Keim, president of Century 21 Keim Realtors here in the Lehigh Valley. We touched briefly on what led to this big mess. We're going to talk about that predominantly in the second half of Outlook, and that is straight ahead. Stay with us here on Clear Channel. This is Outlook on Clear Channel. Dan Holzman hosting this weekend. Loren Keim, my guest, president of Century 21 Keim Realtors here in the Lehigh Valley. We touched a little bit on Fannie Mae and Freddie Mac in the first half of the program. At the tail end, how big of a catalyst was that decision to mandate some people getting loans for homes who maybe, quite frankly, didn't have any business getting them? How big of a catalyst was that for the mess we're in now?
I think it was one of the prime catalysts. I think it was one of the biggest problems we faced that drove us into this recession. And we're looking all the way back at 1992, 93, and 94 when they first instituted this policy where they wanted more people to have home ownership. Congress decided that only 62 to 63% of people in the United States own their own homes. They wanted to get it up to 70. And the way to do that was to force banks to loan more money at eased restrictions, and restrictions were in place to make sure somebody would actually be able to pay back a loan. One of the reasons it didn't hit until now is prices just kept going up and up. So if someone got into trouble, they could sell the house and get out without a problem, or they could refinance the loan, hopefully into a different interest rate, and be able to stay in the home. When prices started falling, it became more of a problem to try and refinance out or sell the home.
What policies are in place now in terms of handing out loans?
Well, right now they've restricted loans significantly across the board. Every lender out there right now has restricted policies. Instead of being able to get a mortgage with a 580 credit score, you might need a 680. There are still FHA loans available right now, which will take a borrower all the way down to 620. As long as they have a decent job, their income qualifies them, and they can show that they're going to be able to make the payments.
What kind of relationship does a real estate company have with Fannie Mae, Freddie Mac, or is it pretty much lending institution and Freddie Mae, Fannie Mac?
It's more the lending institutions. We introduce a borrower to or buyer to 5 or 6 lenders. They can decide who they want to work with. Unfortunately, most lenders do sell their loans to Fannie Mae or Freddie Mac. That's the secondary market for loans. So no matter where you go, you're typically dealing with Fannie Mae or Freddie Mac.
So you're not necessarily, in terms of the financial status of someone who's looking to buy a home, you don't get that heavily involved?
No, we just want to make sure that they're qualified so we don't waste the time of a seller writing up an offer that's not going to get the settlement.
Right. You said Fannie Mae and Freddie Mac, one of the issues, one of the predominant ones that led us to this mess. What are some of the others?
That's probably the biggest problem. And unfortunately, in 2004 and 2005, there were congressional hearings about Fannie Mae where they talked about the problem that was coming. And Congress chose to ignore it because they wanted to make sure more people own their own homes.
So it sounds like government, in your opinion, is predominantly to blame for where we are in February and March of 2009?
Yeah, they are. Subprime industry was to blame in some parts as well. One of the problems we ran into with the subprime industry, those were mortgage-backed securities that were sold to pension funds and other investors other than Fannie Mae. In many cases with subprime, they didn't require the taxes to be escrowed. And if you're loaning a borrower who has shaky credit 100% of the mortgage, and that person gets hit with a $3,000 bill from a tax authority at some point in time, it's going to create a problem, and I can't believe they didn't realize that.
What came first, a recession or a housing industry collapse?
I think the housing industry collapse drove us into the recession. I think that's the primary catalyst behind the recession. I think everything else followed. When people get scared and start losing their homes, they stop buying stuff. And when people aren't out in the market buying stuff, industry stops making product and starts laying people off, and as people get laid off, unfortunately, they buy less stuff, which creates a bigger problem.
You've seen a lot in your 20-some years doing this. What do you see getting us out of this funk that we're in terms of the economy in general, but in the housing industry in particular? I suppose if the housing mess led to the recession, I would imagine would a better housing market lead us out, or would the recession have to go away first?
No, I think the better housing market will lead us out. I think unemployment's actually going to continue to climb this year, but I do think we're going to stabilize in the housing market. Like I said, there's that rubber band effect where people want to buy, they need to buy in some cases, and now is a fantastic time to do it. In the typical year, only about 10% of the population in the United States moves. Only about 7% of the population buys a house. What we need to change is consumer confidence. Right now it's in the tank. If more people start thinking now is a good time to buy, now things are about to turn around, that's when you start seeing things turn around.
How will the housing industry stabilize if unemployment's going to be going up? You said if people don't have money, they're less likely to make big purchases. How does that work?
Well, even with a high unemployment, and we're looking at 6 or 7%, there's still a huge percentage of the population that can buy a house. If 90% of the population is working, and we only need 7% of the population to buy a house to jumpstart the housing market, I think that's going to happen very soon.
In terms of new builds or living in homes that have already been lived in, does it make a difference which entities kicks into high gear?
No, as long as it gets started. For example, with the first-time homebuyers, if a lot of first-time homebuyers come out and take advantage of this new tax program, that usually drives 2 or 3 or 4 sales. So the person selling a first-time home turns around and buys a moderate-priced home. The person selling the moderate-priced home might turn around and buy a higher-end home, and somebody selling that higher-end home might buy a luxury property. So it actually drives the market up.
How involved are you folks in commercial real estate?
We do quite a bit. I actually wrote the best-selling book on commercial real estate that's on Amazon right now.
Well, you're the right man to ask these questions. Where is commercial real estate? Is that in the tank as well?
It is. It's actually declining at this point in time, and there's a couple of reasons for that. Commercial real estate doesn't necessarily follow residential. But with so many retail outlets disappearing right now, we're seeing retail stores moving out of business buildings. We're seeing offices closing up. That's leading to more space on the market, which is driving the value of real estate down because real estate values in commercial are based on the income they can generate.
How hurting are we here specifically in the Lehigh Valley, again, in relation to the rest of the country?
We're doing a little better than most of the country. We're not impacted quite as badly. We are right between New York and Philadelphia, and we do have quite a bit of industry here. Is
our geography generally a plus in terms of the market?
Absolutely.
Tell me why.
Well, it is a commutable area for New York and Philadelphia. There are a lot of people who like living in the Lehigh Valley. It's a great location to raise a family. We've got some great school districts. And we still have, our prices didn't jump and skyrocket like they did in Florida and California and Arizona. So we didn't have that huge rise, so we don't have that far to fall.
Generally, would the commercial real estate industry sort of coincide with an uptick in residential, the real estate industry?
I think it's going to take a little longer for commercial to recover because business is going to have